morning, everyone. This is Mortgage Pros 411. I'm Audrey Boissonou, joined by my co-host Kevin Casey. And today we are joined by Robbie Chrisman. Robbie Chrisman, how are you today?
I'm a little cold here in Nashville in November, but warms my heart to be speaking with you, Audrey, as it always
Oh
does.
my God, the feeling is so mutual. Although I don't understand why you decided to be outside versus inside if you're cold. Why? Explain, please.
I'm in a friend's apartment and they also have a 1 p.m. central meeting, and their meeting in their apartment takes precedence over.
Yep.
I told her about Mortgage Pros. She said she was a huge fan, but not enough to let me have the apartment. Yeah.
You were relegated to the balcony. Got it. Okay, so first of all, I want to make sure I don't forget this week. It is November, almost the end of November. Everyone needs to renew their NMLS. If you have not done your continuing ed, go online, find some God help you online course that you can take now that the good live classes are over, and take it and get your continuing ed done, get your license renewed, because they are not quick these days.
Mine took 17 days and I did it on the
I
first
keep
day.
reminding Kevin that every time he brings that up, that we are reminded that they look closely at him for various reasons. So it probably took his longer. But with all that being said,
It was that FBI part of the background check or something.
yeah, the fact that you got through yet another year is amazing. Robbie, why don't you walk us through the Chrisman Media Group and all that is these days?
We're gonna tune out listeners 3 minutes into the show. That's the plan.
Listen, just do it. Get it done. Come on, baby.
Well, for those of you that may not know, we went from looking like a 1990s phone book of a website. Sorry for this siren in the background here. We launched a brand new website, chrismancommentary.com. I know it's tough. It requires spelling my last name correctly. It's right here on the screen, chrismancommentary.com. In addition to the daily newsletter that you've come to know and love, the daily podcast that many of you listen to, which is audio, we have a weekly slate of video shows, Monday through Friday, all different sorts of subjects. This one here being your originator-centric show. I will shamelessly say to all of our myriad of attendees out there, sponsor the show. These two are the greatest. What are we missing here? We will plug it to Alamo, New Mexico. We'll plug it all over in our newsletter. We'll get you good exposure on LinkedIn, some other stuff. Reach out about sponsorship. But anyways, yes, the plan is to grow this media empire. Written content, audio content, visual content. We've introduced thought leadership on the website. We're working on building out a comprehensive vendor directory for the entire industry. If you're looking to upgrade your tech stack, we will be the one true agnostic marketplace out there. Then I know plenty of you love LinkedIn. We're going to bring some of that discourse over to the Chrisman community town hall, the hub of mortgage, the epicenter of mortgage. I kept getting close to the camera. I'm getting passionate here. But it's some really cool stuff we're doing. The whole thing and it'll look better than my hair when it's done. The whole thing that we're trying to do, add value to the industry, be the place for mortgage professionals, a site for mortgage professionals, by mortgage professionals. Pick what you want. We have stuff for you. So at least at the very least, give us a look. chrismancommentary.com. Click on a banner ad or two. Make my advertisers feel happy. Audrey, there.
And if you get the Bible study stuff, you've spelled Chrisman wrong.
Yeah. I actually quick story.
Okay.
Because I thought that our last name was Christman when we moved over here. I thought they just dropped the T at some point. We're from somewhere in Europe or something. Turns out, and our family came to Tennessee, right here, Tennessee, and we were Crossman, Crossman, and at some point it got switched to Chrisman. But we're from Tennessee. If I look like a backwoods hillbilly, now you know why. That's where my family came from. Audrey, ask my dad about it sometime. His great grandpa in the Spanish-American War out of Tennessee.
Wow. Okay. I did not see that come in. All right. Well, with all that being said, thank you. Nobody, by the way, your long history with, your padre, nobody has any trouble spelling your last name. Trust me. So it is, and if they do, seriously, where have they been?
The web does.
Okay. So with that being said, just want to make sure everyone is really aware that even though this is a very short week, tomorrow being the last day of it, it has been a very, very busy news week. Tomorrow we have PCE, Fed's favorite measure of inflation, personal consumption expenditure. they're estimating that the headline will be up 2/10, core will be up, just over 2/10. But the important thing to remember is that they are replacing like almost flat numbers from last year. So it's going to make the year over year number go up a little bit, which the market may not like. So really be aware of that and be watching for it. These short weeks and the rates, it is not healthy usually to float into them. So be careful if you've got things that need to be locked. We're also going to have pending home sales tomorrow and then an update on GDP. And then today, like as we speak, I don't know what's going on with that right now. The Fed minutes are being released, and that's not typically great for the market. So just be on guard because there's a lot going on, even though it's, turkey time. Also, December 6th, we're going to have BLS, which is a biggie. And again, I don't know why, because their numbers are such baloney. Oof, that was hard to say without using a better word. Anyway, so it moves the markets. And then again, we have the Fed meeting, again, making a rate decision on February, good God, I wish it was February, December 18th. And that will be very interesting to watch. So stay tuned, kids. There's a lot going on out there. So where we are starting.
Wait. Before you go, you missed the biggest announcement of the year.
I did not. I was about to make it. Good God.
And what was that?
They raised the conforming loan limits today.
Yes, they did.
Did you see that? Okay, so there was a lot of talk about whether or not, because the appreciation rates in the last couple of months since the geniuses at some of the
they came out today, announced appreciation rate of 4.3% on housing.
Well, I just thought it was, the bigger lenders keep trying to preempt each other and they come out earlier and earlier. So this year we had new conforming loan limits supposedly like what, September? Maybe it was
September. They said it was going to be 802.
Yeah, so it is 806,500 for baby conforming, as I call it. And then high balance, if you're in a high balance area, is $1,209,750.
Yeah. And if you got a 4-unit building, those numbers are really big. 1.55 for conforming and 2.3 million for high balance. For it's a little bit harder to do though in a high balance on 4 units. I've not seen it too commonly done.
Those numbers are amazing. And it's also interesting because again, do you remember when we were stuck at 417 for
Forever?
10 years?
10 years.
Literally
10 years.
10 years, for God's sake. Okay, and before we get too deep in the weeds, I just want to just share a little nugget, shall I say, from Rob Senior's commentary. His pro tip to start the week: be sure to bring up politics at your family's Thanksgiving dinner. You'll save a lot of money on Christmas gifts.
I thought that was hilarious.
I thought that was hilarious. Okay, so back to conforming loan limits. So as we know, we've had higher limits for the last couple months. These don't technically go into effect until what, January 1st?
January 1st, but the loan has to, so it's for any loan that, where the first payment is not due until January 1st for conforming loans for Fannie, Freddie. If it's FHA, it can't be originated until January 1st. I'm assuming VA is probably the same thing. So FHA, VA, you got to wait till January 1st to lock or register that loan. But with conforming loans, you can do them right now.
Yep. But again, it is, yeah, I'm just fascinated by the fact that we are at $806,500 for baby conforming. Yeah. Oh, I know what I wanted to say. There are a couple of counties that no longer have, or their high balance numbers went down or disappeared. So if you are in a high balance county, just double check your numbers. County still is included in that, because not all of them are. There was like one in Utah and 2 in California or something like that. I didn't see which was where they went away, but I thought that was interesting.
Probably the ones that are right on the cusp of being just over the conforming limit. I would suspect a couple of those went down, and they're probably either in the Bay Area.
Yeah, right out of your,
I'm thinking because like Sonoma County, their numbers are just slightly over the conforming limit.
You know what?
One of those, it could be one of those counties that are just like that.
Check Fannie Mae's website to find out.
Go
what
check it. Make sure you're in your numbers are right.
Good God. Okay, so next up, let's talk, Mr. Chrisman, about Scott Bessent. He's the nominee for Treasury Secretary. He is a hedge fund guy. He apparently, although he's very pro-business, he's moderate. He's less aggressive on tariffs. He could like change how they're going to issue treasuries going forward, which could be maybe a good thing. Maybe it won't be as dramatic for the market. We'll see. But considering our president-elect has announced that he's going to bump up tariffs to Canada and Mexico 25% on day one of his presidency, plus an extra 10% bonus to China. I've heard both of those things separately, so here we have this nominee for Treasury Secretary. He's supposed to be moderate. He's going to be, I think he's good. The markets liked him yesterday before all this extra tariff talk hit the scene last night. So there's that. And then we hear that tariffs are going through the roof for, our neighbors. How do we reconcile all this? What are your thoughts on all that?
My thoughts on all this are it's easy to get caught up in news headlines. Oh, core PCE came in 0.1% above what it was supposed to tomorrow. Oh my gosh, the sky is falling. Oh, Scott Bessent. Well, finally, an adult in the room now that we got Matt Gaetz out of here. Oh, wait, Trump's going to deport millions of it's easy to get caught up in that or get flustered or just let the news cycle impact you. We have a whole macroeconomic narrative out there. You need to take, these are just 3 or 4 things that I mentioned that can go in conjunction with dozens of others. We got a lot of housing data this week. Okay, what did house prices do? What did new home sales do or existing home sales do? What is the estimate for GDP? What did the Fed minutes say when they came out 13 minutes? You need to take all of this as a much larger thing and not overreact one way to one data point. I think that's the important thing here. I mean, and it's also easy to get caught up in paying attention to a lot of this. And Audrey, I would ask the end goal beyond staying informed, because if I'm an originator out there, I still need to wake up and work hard, work on my relationships, work on my files, get them through to closing, grind. And that's what's going to lead to business rather than worrying about what did core prices do or who did, what did Janet Yellen say about Scott Bessent? Like, I'm sorry to be a little cynical here, but all this speculation about what things are going to mean, didn't that get us into trouble here from September to now about, oh, rates are dropping. Good. We survived until 25. It's time to rock and roll. Okay, well, rates have shot back up 75 basis points. Where'd that speculation get you? I'm sorry. I'm going to try and not get flustered here, but it's about continuing to do what you do well rather than thinking you can time the market or predict what's going to happen or react to these things like that.
Absolutely.
So from our perspective, the reason we're interested in this as loan officers who are working with clients every day is they see the headlines, they're asking the questions, we're trying to help them and guide them in their journey through the home buying process.
Can't you yell
And
at
the
them?
more information that we have, the better off they are. And we do exactly what you're saying, which is we
You
take
yell at them?
headlines.
You yell at them like I just yelled at you? That's
She
perfect.
does. Yes,
Love
she
that.
does.
Love that.
I actually do. I 100% do. I have literally threatened to beat the shit out of my clients before if they do or don't do certain things. So yes, I do. And with all that being said, were you yelling at me in particular? Because
I was getting riled up like Stephen A.
I
Smith.
mean, my God, do you not watch our show? I guess you don't, because if you did, you would know that every week what we're talking about is, okay, here's all this crap. Now, what does it mean to us and our borrowers? Most importantly, our borrowers. How does it trickle down? And it does all connect because we're a global economy, even though we are trying to be less so in the US these days. And so how does it all fit together and how does it trickle down to our borrowers? So back to the original question, which you have yet to answer.
We're going to answer it.
Is tariffs. We are looking at monster tariffs, which potentially is going to accelerate in our inflation numbers. I mean, intensely.
With our biggest trading partners, Mexico and Canada.
That's right. So and by the way, Canada exports 21% of their GDP to the US. Mexico exports 27% of their GDP.
Does that include fentanyl and cocaine though?
Yeah, right. And if it's to be believed, like the northern part of Mexico is so closely tied on a manufacturing perspective to
Yep.
the US and the US economy right now, that if we actually did this, it would impact us, which by the way, would drive up inflation, make the rates go back through the roof and throw everything all off. So explain to us your perspective, Mr. Chrisman.
Well, thank goodness I like Vermont maple syrup and Ohio fentanyl better than that foreign stuff. So no. Uh, I'm gonna tie it into what I was gonna try and get in before, and I'm sorry to be like a politician here that takes your question and then swims. But in terms of what it means for borrowers, I get asked a lot from people that are kind of, real estate agent friends, they're younger, or friends that are looking at buying a house. Should I lock now? Should I wait to lock? And I'm always like, one in the hand is better than two in the bush, especially if you want in this situation where it's like, okay, well, inflation's going to rise because of these tariffs. Things are going to go up. All right, well, if you're talking to a borrower on the phone, get them locked today. We have a float down policy, worst case scenario, like, and then if we think that this stuff is going to make rates rise, and in theory, a lot of this should already be priced into markets. But if we think it's going to keep making rates rise, then good. We locked way back. We locked as soon as we could. You're good. Forget caring about how much rates rise. Let's get the file closed. Let's focus on that. What I will try and answer your question more directly. Yes, I
Please.
heard 25% tariffs on Mexico and Canada imports. I heard 10% tariffs on goods from China, which is a lot of this. It seems to be Trump's trying to say, well, you countries are responsible for the flow of migrants and illicit drugs. I guess tying tariffs into it will restrict that somehow. I don't, I had written in Trump 1.0 term, it seemed like every day, the capital markets for Chrisman, the US-China trade war, US-China trade war and Brexit, US-China trade war, Brexit. I'm tired that I'm tired for me in the future thinking about, I'm gonna have to write about the US-China trade war again. I don't think good things come from trade wars. I like a free market economy. And so I don't think that it's necessarily going to be good for inflation. I don't think any of us do, right?
Well,
I-
I think it's important to remember that the first Trump administration, they pumped up all these tariffs on China, and Biden campaigned against that, said how terrible it was, and then when he was elected, kept them all in place and then upped the ante recently. So it's not like these two administrations were very different from each other. They were not. So one started it, the other one continued it and upped it. And so again, this idea that it's not about one administration versus another. It's about now we're talking about 25% more on our neighbors, which, okay. So I'm just and how does that tie to inflation? And in the long term, where are we going with all this? And again, I'm curious. My biggest question is we've got this new nominee for Treasury Secretary who's supposed to be pretty moderate. And do you think he's gonna be able to rein Trump in a little bit and maybe
No one's reining Trump in.
well, I mean, he was nominated for a reason. Like, I mean, and again, the fact the markets like him, everything I've heard about him is positive. I'm knocking on wood. We'll see. But
Wait, heard about the Treasury Secretary or you heard about Trump? Just want to be clear there.
Treasury Secretary, thank you for clarifying. So again, I'm just curious. So if you don't have an opinion, that's fine.
No, I do. I want to add this. When we think of inflation, there's two big drivers of it. One is demand. And if people say, okay, well, there's a lot of demand out there, that's going to drive up inflation.
Yep.
Maybe these tariffs make it where things get so expensive that it drops off demand, and then we all know how the supply and demand chart works. Maybe it'll bring it down. The other part of it is expectation of future price increases. So I'm thinking, all right, well, right now, if we're hearing about these tariffs today, there's an expectation that there will be future price increases. That makes people want to buy things today. That stokes inflation today. Once we get those price increases, I think there could be less demand and it'll drop them. And so it could be a temporary spike right now. That's kind of what I'm hopeful for, is that we'd see a shorter term spike and maybe longer term things come back under control. And I'll relate that to Trump since you asked about it. I think he's kind of in this shock and awe phase with some of his cabinet, seeing how far he can push the line, how many loyalists he can get in.
I mean, like appointing a spy to be head of intelligence? Like not an American spy, a Russian spy. But
I saw that Horowitz report. That was a good one. Yeah, food in the head. That yeah, I got it. I think a lot of this is kind of this temporary shock and awe, much like I was saying with,
Yeah.
and then it come back to
And
reality a little bit. You know
Yeah,
what I mean?
I think he's good at that. He's good
Yeah.
at like scaring the crap out of the press, get them all angst, and he goes, "Oh, I'm not really appointing that person. I'm gonna appoint someone else instead." But
You can, I mean, yeah, it's
my solution has been, honestly, is on my newsfeed, I block anything that mentions the word Trump.
you are what?
I block Trump on my
No.
newsfeed,
Okay.
and it keeps me from doing the crazy highs and lows stuff. I get the rest of the stuff filters through, but I don't get the highs and the lows of stuff.
There you go. Sorry, it got too cold outside. I'm going.
Yeah. Hopefully your baddie holds out.
Here we go. Oh, here. We don't need that anymore. Boom.
All
All
right.
right. Here we go.
Wow. Didn't see that coming.
Didn't think you're gonna get that.
Crispin strip on Mortgage Pros 411.
I'll do my Trump YMCA dance to it.
Okay.
Or
All
whatever
right.
they do.
So no, just again, all we can do is wait it all out and see what really happens. And you never know when something's going to come in from left field. Anyway, we talk about that ad nauseum on here. Just and yes, focus on how do you get a new transaction? How do you go help somebody achieve homeownership? And there are a lot of people out there right now who are really having issues paying their bills. I mean, huge, huge, huge. So,
But
it
that gets back to what I said, Audrey, about one in the hand is better than two in the bush. Like,
Yep.
Yep.
Yeah.
Yes.
It goes back to the question we got raised here. When we lock a loan, do we lock with points or not lock it with points? My general rule is on points is if you can recapture the points in less than 2 years, then it can make sense. It makes a lot of sense. If it's going to take you more than 5 years, it doesn't make any sense at all. And then it just kind of depends where the market is on those numbers. But
that's traditional. I actually have a unique scenario where I paid points for my mortgage, and
Yeah.
it was to get the DTI under the threshold that I needed,
Yep.
so that I could get pay points if it's going to work the file to where you can close a borrower that you wouldn't
Yep.
otherwise be able to.
Yeah.
I've done that many times too.
Right.
I had the conversation with somebody the other day, like, should I pay points to buy down my rate? And so I went through that. It's like, well, your DTI is fine. You don't need to buy the rate down. You'll still qualify. I went through the 2 years, if you recover the points in 2 years, it's a no-brainer. If it takes longer than 5 years, it doesn't make sense at all. But then it was, well, do you just go grab a rate because you like that rate? Hey, I can get 6 and 7/8 if I pay a point, or oh no, it's 7 1/4. I'd really like to have a rate in the 6s. And sometimes that is an issue for a borrower, just to have that number that they're really looking for.
Can I ask you too, what's the feedback you're getting from borrowers about an acceptable rate for them at this current juncture? Anything below 7 and they're happy? 6?
Anything below 7, they really like. It's really funny.
Wow.
Which
Yeah.
thank God, because a few years ago was anything below 3 or
Yeah.
and for a while they're below 2. So and that is the beauty of the situation in the last few years for those of us who have survived it just barely, is we needed to get to a point where the rates just went really high, came down a little bit, but now that is so much more 6 and 7/8 is so much more acceptable than 8%, which is where we were a year ago almost. So it is, and for me, what I do with my borrowers is, again, it's a conversation of how much is it going to cost you? I mean, with our loan amounts, a lot of times a point is a huge amount of money. It can be 6,000, 10,000, 20,000 pretty easily. And so it takes a hell of a long time to catch up on that and make that worthwhile. So for me, I'll look at, you always want, and oh God, just a reminder, really look at the rate sheets, because I'm seeing things lately where, between 8s, it might be a couple $100.
Yeah.
And also flips where, and this is always, and maybe you could explain this as a former secondary guy, Robbie, is why is 6.5% less expensive than 6 5/8? You know what I mean? And so that happens occasionally, and I've seen it over the years, and
It's demand, because you've
Yeah,
got
sometimes it's about what security it can fit into. I would add too, and I'm sure you've talked about this on the show before. Sure, an eighth in rate is nice, or a quarter point in rate is nice. But if that's a couple $100 a month versus you're looking at a property where the overall insurance premium for the year is 5 or 6,000 versus one that's 12 or 13. That's a much bigger difference. That's what's scuttling a lot of these deals, and that's something to keep in mind. Talk to your borrowers.
That's the first thing I do is I get a quote. Although now it's finding, like I have one right now. I put in a request for the insurance quote last week. I still haven't gotten it yet. I'm like, I really need that quote, guys. Come on. They're like, yeah, we were working on it. It's not coming back from the insurance company.
Go to a different company because I had that happen recently. And the first person was like, oh, I can't get insurance. Oh, it's going to be this. Oh, it's going to be that. But another insurance company, we had it within like an hour. And so it is varies. You've got to have, and Robbie, we've done multiple shows on this year alone, is talking about insurance and different ideas and different strategies and how to handle it, and how to guide our clients and the realtors, et cetera, et cetera. So we're all over that because it is a huge thing. And we're also hearing from the regulators and, think people like Chief Economist at CoreLogic, Dr. Selma Hepp. She talked about this, early on, and they're looking at it. These data, folks are really looking at the impact on the market, on the borrowers, on delinquencies, with regard to things like insurance, et cetera, going through the roof. So
Yeah.
they were showing that. I saw something on LinkedIn the other day, and I don't remember the gory details, but in markets where the insurance rates have gone up substantially, the delinquency rates are following. And so it's really something that's important and something to think about.
I think it certainly has the attention of both mainstream America and those in Washington, D.C. So hopefully there's a solution coming. I'm happy though, I asked the question about what are borrowers happy with. I think it's a good thing that borrower psychology has readjusted to the point where, hey, anything under 7 is good. It's not anything under 4 is good or 5 or 6.
They gotten past the 3 thing and the 4 and the 5.
Way past the 3. But even I would say earlier in 2024, it was anything anything above 6.5, they were like, "Mah." So it's good to see that it seems like it's fully reset at this point. And it's like, hey, I know that once rates come down, there will be bidding wars again and price will go up. So affordability is not getting better. Get in now.
But how many people, when the rates did dip, how many people took a bunch of loan applications, had a bunch of borrowers who were still waiting for the rates to go lower and didn't
They
get
missed out
in fast enough. And so now they are toast. So, but again, I think it's an opportunity in those situations because, okay, they wanted to refinance when they thought the rates were in the low 6s or high 5s, but they missed it. And now the next time that comes around, they will be a little less greedy, would be the word that pops into my head. And maybe they'll move a little quicker. So again, we just have to take each of these dips, each of these situations as far as what's going on in the market and help to educate our borrowers.
Yeah, and I think that's a very good point about education because they might think that they can time the market, or they're still looking at you as their trusted real estate professional, much more so than the real estate agent. The real estate agent can talk about home prices in a certain school district, sure. But when it comes to the overall market, what's the overall market doing? What are rates doing? This is where you can sell a client on, I'm going to educate you on this. I'm going to be there with you. I'm going to put you in the best scenario possible. Trust what I have to say. And if I say lock today, lock today.
Yeah, exactly. Well, and I will have a conversation with them too, just because the market is so volatile that, listen, if I see something, I just want to make sure that we have an agreement ahead of time so that I can make a move without having to call, a bunch of people and trying to reach them as the market is broiling and, going in a direction that's unpleasant. I also want to mention that credit delinquencies for borrowers earning more than $150,000 a year, those are our high income earners. If you're not in California, they more than doubled. Those delinquencies more than doubled in October. So there is an issue going on with people and their cash flow, and it's not translating to the reports that we're seeing out of the federal government and at a national level. But people are really struggling on the ground, and the Fed's beige book actually talked about this and reflected this. Yet they keep going, oh, the economy's so strong, the economy's so strong, but that's not translating to reality when you're talking to small business owners who are really struggling, and when you're looking at restaurant owners, et cetera. And then when you see something like this was reported by Vantage Score. We got some problems, right?
You're starting to see cracks because I would think the first thing a borrower or anybody would give up is, I can't pay my credit card. Then it'd be, I can't pay my car. And the last thing you'd want to do is, I can't pay my house. You know, so
No. The last one is can't pay my cell phone.
is it?
Yeah.
Okay. Well, after house, cell phone, sure.
They,
You know,
they
like
will not make a house payment before they will not make their cell phone payment.
if we are at the point where we're at the house, though, and we're starting to see delinquencies or defaults climb, that means we're already blown through some of those other gates, which is really scary
Yep.
for the overall, consumer spending in America, which drives the economy.
Yeah, right. 70% of our economy, right?
Yep.
But again, we'll have GDP tomorrow for Q2. Is that the second look of Q2?
Which we need to remember. I will sing this into that. That is such a backward-looking report. Q2 ended in June. We're almost at Christmas, so just take it with a grain of salt, okay?
Yeah. But again, I agree 100%, but it is something just to look at. So it is. Speaking of which,
Me, look at me. Look how good look I am now in this light. No, sorry. Go ahead.
well, at least we could keep it, focused on things that really matter. I thought it was speaking of Q2, QCEW. They are the end all when it comes to the jobs report. So we have the BLS jobs report, which Robbie, you probably don't know because you don't watch our show. The BLS jobs report, I've dubbed the BS jobs report because it's always so flawed. And for years, economists have defended it because those poor people, they just don't have enough staff and they're just going off of, they're doing their best. And I'm like, okay, we're using so many seasonal adjustments and so much imputed data at this point that we are getting some wonky numbers that move markets. It drives me crazy. Okay, so with that being said, this is so we got the Q1 to Q1 QCEW report last, and they had shown that BLS was off by 818,000 jobs in the previous year. We now have gotten Q2. So from Q2 2023 to
We're losing her.
farm payrolls at
Wait, Audrey, we lost you there for a bit.
I froze and missed all of that.
Oh, really? I froze?
You froze.
I froze.
Oh, you froze. I was so busy. Anyway, bottom line here. Let me just bottom line this, shall we?
This is the BS jobs report.
Yeah.
That's what it's called now because they're so full of crap. So, QCEW versus BLS. So QCEW those are the numbers versus what BLS represents every month. In average, from Q2 to Q2, they were off 100,000 jobs a month. 100,000. Just think about what our market would have done or maybe even the Fed, had they realized that we were off that much in that BLS jobs report. So it's a 1.255 million overstated jobs from Q2 to Q2. Unbelievable. Anyway, what do you think about
So
that?
does anybody have a job?
Anyway, okay, do you guys have anything to say about this? Because it just drives me nuts. No? Nothing?
Well, I think maybe they should just eliminate the department and they could add just some Trump give the numbers. That would
Isn't Vivek and Elon gonna fix all this? And
yeah, I think so. They're gonna fire everybody, so the numbers will go even worse.
Yeah.
Look, I'll speak a little more seriously, and hopefully my internet holds up here. But it frustrates me that these back month revisions are now undermining confidence in economic figures, and not only economic figures from the U.S. government. Census Bureau releases stuff, the Bureau of Labor Statistics releases stuff. It undermines faith in even tomorrow's PCE inflation numbers. It undermines all this of what, and people don't pay attention to back month. Sorry, they do pay attention. They don't give it the weight that they should.
Right.
It never gets the weight that it should. It's always the headline in the moment, and then we're on to the next thing in the news cycle. So
no, I was doing the same thing because I was going through all the numbers from FHFA, trying to kind of calculate what the conforming limit was going to be and trying to give it a guess of what I thought it was going to be. And I did exactly what you're thinking. It's like, I wonder how accurate these numbers are that they're coming out with, because it doesn't quite make sense. I mean, for me, where I was looking at the numbers, digging down into their numbers, well, they came out today that home values increased by 4.3 year over year, but yet they increased the Fannie Mae or the conforming loan limit by 5.3. I forget what the number was now. 5.2. So well, why did you increase by 5.2 when the home increase is 4.3? I don't understand that. I'm gonna dig into it myself, but
Lagging. They're not up to date this month. They're these, you know what I mean? Yeah, it is. And again, the idea that this is all political, those BLS jobs numbers have been revised for years, for as long as I've ever heard of
yeah.
the.
And I understand why they revise them, because they're waiting for data from states, and some states don't get them the data as quickly as possible. I mean, it can't be that hard to get a state to, hey, well, if you want some more federal money, get your data to us quicker. It's not that hard. And I mean, I'm sorry, who holds the purse strings kind of makes the rules, and the states want that money, so get us your job numbers that quicker. I don't get the where their numbers are going wrong. And then, a lot of the numbers, hell, you can make them up better than they do.
They are making them up, Kevin.
I know. I understand that, but I could make them up better than they do.
That's probably true. I would give you that one.
And I mean, this is frustrating as a whole, because when you start to feel like, well, they just make up the numbers. Okay, well, maybe they just make up it's like nothing is true anymore and everything is possible. And it's a whole different discussion about the way America's
Well, I
going,
mean,
but
things
it's
like
frustrating.
Logic, CoreLogic, their data it's data. You know what
Yeah,
I mean? Based on surveys or seasonal
right.
adjustments.
They're not waiting on states to report their unemployment numbers for the week of,
Audrey, next time you have Selma on, tell her that their new slogan should be, it's data.
Yeah, exactly. You know, what's interesting with them though is their forecasts are always very conservative. Like their forecasts usually end up being lower than the actual number ends up being. But they're conservative, but their data that we're getting month over month, I think is probably as solid as it comes, just because they're
uh-huh.
not guessing, you know?
Mhm. And
Yeah.
I'm a big fan of Selma. I think she's really good at what she does.
What?
I'm
You
a
think
big
you
fan
like
of Selma. I
Selma?
think she's very good at what she does.
Love her too. Um, okay, so
She's
existing,
a fun interview also, which makes it.
what?
She's also a fun interview on our show.
Yeah. Existing home sales for October, they were up 3.4% month over month, annualized pace of 3.96 million units, up 2.9% year over year. First year over year increase in more than 3 years on existing home sales. So that's positive, right? We currently have 1.37 million units in inventory. That's up 0.7 to 7/10 month over month and 19% year over year. It's a 4.2 month supply. Normal is 4.6. Average days on the market, 29. So,
Really low.
healthy. It's really healthy. Number of transactions that sold above list, 19%. That's down from 28% last year, but still, there are places where they're bidding. I hate to use the word wars because it doesn't feel like that anymore, but multiple offers. First time home buyers are 27% of the market, cash 27% of the market, investors 17% of the market. So anyway,
Yeah, you just threw out like 15 statistics. What is our takeaway? What's our takeaway here, Audrey? Good report, bad report? What's going on?
way feels like it's healthy. I mean, like this is we're moderating back to a more normal market from our post lockdown pandemic market. We are still in most states, nationally, we are still 20 to 25% under pre-pandemic inventory levels, but we're getting better.
Yeah.
There's still, it's the first time home buyers are usually in the high 20% of the market. We're still there. You know what I mean? Like it's healthy.
Something I noticed when I was looking at the conforming limit numbers on the home appreciations, there were some areas that had depreciating values across the country, but most of those were in the areas where they were the jumbo areas. So San Francisco area, Washington D.C. There's other little pockets around the country, and you could say, oh, that's where the higher home prices are, where typically those are jumbo loans that are being done, not conforming loans that are being done. And we're seeing it, Audrey, we see it in our neighborhood with the Basel, was the Basel Act or with the
Great. Seeing what you're seeing.
Yeah, so the conforming limits, it's harder to get a jumbo loan. It's just, you've got to put more down than you did before. You can't, do a 10% down at Chase anymore. It's not there.
Mhm.
So
I-
it's,
Can I comment on this
yeah,
sales report? Is that okay? So
Please.
we
love-
remember, new home sales come from builders, existing home sales come from individual homeowners. And home builders, much more so than individual homeowners, are far more eager to sell their inventory. They'll use rate buy downs, they'll use price reductions, they'll use other incentives to keep sales up. So that's one thing. The other thing, and we've talked about this previously with the last subject, there are a lot of revisions to homes, at least new home sales. There's a lot of revisions. And the average, I have a stat here actually. I prepared for today's call, Audrey. So over the last 10 years, the average first revision on new home sales offers a rise of just 2,000 homes, and that's annualized. But it ranges by a lot more than that. It can be anywhere. I've seen there was plus 175,000 home revision in July of 2020. There was a negative 126,000 home revision in March of 2022. So yeah, it's like we said for earlier, it's hard to judge something based on what you get. It can swing wildly in either direction. Unlike the Bureau of Labor Statistics, which seems like it's always revising the job numbers lower. Home sales can vary wildly in either direction as we move into the future.
Well, speaking of new home sales, Robbie Chrisman, thanks for bringing it up, because in October of 2024, which is most recent, annualized pace for new home sales was 610,000 homes. And that was a decrease of 17.3% month over month. However, it is very important to note that most of the decrease happened in the southern states where they were having
Perfect.
fairly significant storms or maybe a hurricane or two. So that again, when you're looking at this kind of thing, so the media, and we talk about this all the time, they take this and they go, oh my God, the sky is falling, new home sales fell off a cliff, everything's going to SHIT and we're all in trouble. And the reality is, if you pull back and you say, okay, it was mostly in the South, and by the way, what was going on there? And so it's probably unlikely that someone's going to sell their house or be looking to buy a house when there's a hurricane swirling around their heads. So those are very important distinctions to make.
The only thing I would add to that, Audrey,
The
is
only
forecasters knew that those hurricanes were going to impact it. They had still forecasted, I think, 725,000 as the figure. And so for it to come in more than 100,000 below that is a big, sizable miss, even accounting for the hurricanes.
maybe.
Okay. All right, keep going. Keep it moving.
Because our year over year annual pace on new home sales is up 9.4% year over year.
That's
So,
good. It
again,
should be.
right.
What? These builders should be building. Come on.
Okay, listen to this. Okay,
well,
so
they can't get the lumber from Canada anymore.
right.
How are
But
they going to build anything?
okay, also remember
Missouri Maple.
when you're talking about new home sales, you're talking about like the air that they're selling a lot of times. So there were only 113,000 completed properties. That's 2.2 months supply out of the 481,000 that were sold in October. So completed actual houses that someone could move into, what is a small fraction of the amount of the total new home sales.
Mm.
Make sense?
Yes.
Got
Yes. And so going back to something I mentioned, I'm happy to see. I just got a text from Rob Chrisman Sr. saying Audrey knows her stats. So congratulations, Audrey.
Earlier too, I won't tell him what he said. Tell you what he said.
Oh, he always texts. He just texts everybody. I'm surprised he didn't put us on a group chat together. He loves a good old group chat. What was I going to say about that statistic you just threw out there?
New
Who
home.
knows? Dad, you distracted me. Don't be texting us during the show. I lost my train of thought. Anyways, go on, Audrey.
All right, just to recap though, just in general, this is what's important. And I can't remember if I mentioned this last week, but I don't care if I did because it's worth mentioning again. The net worth of a homeowner versus a renter is a huge, it's an astronomical difference. Okay, so this came from, where'd it come from? Just so we know that I'm not full of crap. Federal Reserve study of consumer finance. So that's pretty credible, right? Okay, well, maybe. Okay. Okay, let's assume this is correct. And we know that homeowners have a higher net worth than a renter, right? In 2019, the average renter had a net worth of $7,300, $7,300. The average homeowner had a net worth of $295,500. In 2022, that went up to renters having a net worth of $10,400. A homeowner having a net worth of $396,200. In 2024, the average renter had a net worth of 10 grand and the average homeowner had a net worth of $415,000. Okay, so if that's an average, that means that some people are lower, and we know a lot of people who rent have less than that, and some people are higher, right? But the bottom line is, should we be focused on getting people into houses? And I thought it was interesting because I was watching you speak to an AI guy before you came on our show today, Robbie. And that conversation, when LOs are concerned that they're going to be put out of a job, well, if you are only looking at agency, Fannie, Freddie, fit into a little nice, clean vanilla box, that's one thing. Maybe you should be a little afraid. But if you are doing what a lot of us are doing, I know Kevin is, I am, where in 2024, I took my own advice that I've been giving the last few years, and I just got over the rates completely and started doing. I've done 99% of my business has been brokered and then mostly non-QM and private money. So funky stuff. Cross.
What was his response about how AI can do that versus conventional?
He didn't really give a reason. What he said was, you can teach the AI model. If you feed the information in, you can teach the AI model to do anything, right? But here's what these tech guys don't understand. When I have a private money deal, what do? I go old school because I have to.
Yep, you call.
They have different investors, they have different tolerance levels for risk, they have different guidelines, they have different everything. The same goes for non-QM loans, where it is so much about, okay, this particular deal and what it looks like. And because it's non-QM, you might have some flexibility where you don't with agency. So with agency, it's a little easier to fit it in a nice, neat little box and tie it up with a bow. With non-QM and private money, not.
Yeah, when I'm doing non-QM, I literally start with, this lender, and I go to the next one, I go to the next one, I go to the next one. And, each one's got better terms, or the previous one had better terms, but then again, more likely get a yes by the next one as I move up the ladder. And as I move up the ladder, the rate starts increasing. But I'm ultimately looking for the yes. And I don't care what the rate is in the end, as long as I get the yes.
The thing is, it's all about exceptions to the rule when you're talking about private money and non-QM. It's what else can I fit my deal into their box? And they will expand the box like agency cannot. So there is so much more flexibility, and it's going to be, you would have to have an AI model for each and every private money lender and non-QM lender. And even then, it's not going to cut it because you're not going to be able to fit every scenario in there. And that is what tech misses in this whole conversation, is that our business, even on the agency side, it is not so neat and tidy and cut and dry. So a certain percentage of the borrowers are simple, right? Okay, yeah, you could just, AI scan it, boom.
Yep.
Most loans, even agency loans, if you're trying to do somebody who's self-employed or whatever, there's going to be some quirky little thing.
Oh, there's lots of quirky things with AI.
The things that your guy was saying. What was his name, Robbie? I liked him.
Michael Vandy from Addy AI.
Yeah, he was great. He was smart. I feel like he really did try to figure out the inner workings of the mortgage business. Not like some of the tech guys who get up at these conferences and they start babbling and you just know they
don't know anything about it. Yeah.
Well, because on these calls, they can type in the questions on ChatGPT before they answer. At the conference, they can't. They're just on stage.
Yeah. Well, I had it with a little thing with AI. I was trying to put together a scenario for the client to show them the benefit of buying now versus renting. And it was really interesting because I used AI to kind of come up with my base of how I wanted to present it. But the AI came out with a calculation showing that the property taxes would be deductible. I'm like, no, they're not. Like, no, that doesn't fit in the box, or it's not there anymore.
The guy on our show made a really good point about that today. He said AI sounds great if you're not a subject matter expert. If you're a subject matter expert, you're like, hold on a second.
Wait a minute, that's not quite right. Yes,
And
I had to back out all the numbers. I had my way of calculating for my clients to show them how the numbers should fit to their situation. Of course, I always state consult with your CPA or tax advisor, but it was just interesting how AI made that big mistake.
what Kevin's not telling you is that his friend told him the thing that really got that borrower over the hump, which is calculate how much rent they paid in the
Yes.
last years and then calculate how much more rent they're going to pay in the next 10 years.
Yeah,
And
that was brilliant from a certain friend of mine that said that.
that
So yeah, so what we did, Robbie, I calculated 9 years of rent payments based on just without them even increasing, just assuming your rent payments are not going to change, which we know they are going to change, but here's what you would pay. It was $400,000. Okay, now here's how much per FHA for the county, what your appreciation is going to be over the next 9 years. It was $600,000. Okay, would you rather lose 400 or gain? That's $1 million swing. That their decision was so fast. It was amazing.
yeah, it definitely, my very nervous, single mom buyer was freaked out about taking on a mortgage. And when I showed her how much she paid in rent and how much she would pay in rent, she about died. She's like, that was it. I never heard another word. She goes, I'm excited to buy this house now. I'm like, great. I mean, because it made sense for her. It made total sense for her. So anyway, it is, I think the AI conversation, the other thing that I thought was good about your conversation was that you really made the point that it is a launch pad. AI is a launch pad. The hardest part about getting started on a project is getting going, right? Where do I start? It gives you a starting point. But just think, if you are putting in the same or similar prompt as, a million, well, okay, maybe not a million, 100,000 other LOs out there, you're going to end up with the same information, and it may or may not be correct. And you also were talking about the regulators. We've confirmed with the DRE and CFPB, and did it come up on FHA last week, Kevin? I can't remember. But anyway, you are responsible as an LO for whatever your bot is telling a borrower. So that is not a question. That is a fact. They are absolutely going to hold our feet to the fire for anything that our little bot spits out. And so when you have a company that was using AI for all their underwriting decisions, and they are denying all of the plumbers because the bot taught itself that plumbers were a bad risk at some point, then you are going to be, I mean, and thank God it was the plumbers, not a protected class, right? So be careful and make sure that you are showing people, because we are worth something. And also the other thing I thought was interesting with this guy is he was talking about how the, like they're using these bots to schedule appointments and figure out what your client wants next. Well, it's all based on what your client did before, right? My client
Right.
this loan. Okay, I will say most of the loans I'm doing for my clients right now are not what I've done before at all. Like not even close. And so you're going to have to know what I know in my head when you're having a conversation with them. Otherwise, that bot is not, you know what I mean? So there's some, I just, it'll be interesting to see how this evolves, but it is super useful for some things, and be careful with the rest, right?
Oh, would you like a detailed? I got last time that I was on this show, and since we're wrapping up here, I'll tell my little story. I got a call from you right now. You don't talk enough. I'm talking more today, right? Last time,
Yeah, you are.
actually,
It's actually a good conversation today.
Okay, good. Hopefully I'm providing value to the listeners here. There was a nice anonymous comment. You were like, "Thank you so much for the insights today. You were a great guest." And someone anonymously commented, "And not too bad to look at." And that made my whole year. Whoever anonymous puts that out there, you made my year. Thank you. Fantastic.
I'll send that to him. Are you kidding me? I told Robbie he looked like he just rolled out of bed and he was modeling his dad body earlier. So,
Lighting is everything, darling.
oh my goodness. Okay. So
I thought I was the only one who got those comments.
What?
I thought I was the only one who got those comments.
Kevin always gets, oh, I really like what you're wearing. Oh, your hair looks good. Oh, this. I'm like, okay, no one likes my hair. Really? Anyway, just because I look like I stuck my finger in a light socket 100% of the time means nothing, I guess. So anyway.
It means you're electric.
Oh, is that it? Oh, okay.
There you
See,
go.
Thanks, Jenny. I appreciate it. Jenny likes my hair. All right. So again, as always, as we are rolling into the last part of the year, it is so important not to wait till January 1st to figure out what the heck you want 2025 to look like. It is now. Like my busiest month historically in my career, not last year, but historically, has always been December. I've always done a lot of business in December. Don't slow down and just give up because it takes too long to get the engine moving again.
Uh-huh.
On to get that momentum going. And so there is something that Kevin and I are cooking up that I am ready to just launch, and he just wants to think about it some more. But we're going to do something where we have times that we're going to get online together, and you'll be on mute, and we are all accountable to each other, and we're making outgoing phone calls because that is a lost art in the mortgage business unless you're a heavy hitter doing a lot of loans. And so, okay, and somebody just asked, can we launch a business plan Zoom call prep? And we've always done business planning phone call or shows in the past. And I'm kind of on the fence about whether we should spend a whole show doing that or not. Maybe we will again. I don't know. You guys let us know what you think. But yes, you need to have a business plan. It doesn't have to be complicated to begin with. It just has to be something. And you have to be doing activity to generate business. So Kevin, tell everyone, you have all of a sudden come alive in the last, couple weeks.
So what I've been doing is doing a 1 hour power call. And I do it have a few other people on a Zoom call. We can see each other. We just can't hear each other. And then we just make a bunch of phone calls. Whoever's on the call picks their category. I'm doing realtors on one day and I do business people on another day. And I'm going to kind of expand it as I go along, back to when I used to do it every day of the week. But it's resulting in business, which is really nice. And it's really cool thing is when I reach out to people, they're like, hey, Kevin, thanks for reaching out. And it's been like, oh, wow, I should be doing this more. So,
it's a function of not just realtors, but also your past clients, but also expanding who you think about when it comes to who am I getting business from? Who do I want to get business from? How is that going to work going forward? How do I get how do I foster these relationships? Because as much as there is this push to automate things, it's that personal touch that people want, even people Robbie's age, right, Robbie?
I've talked to 2 of the top 3 originators per Scotsman Guide from 2023 in the last month for my daily audio podcast. And both of them have said to me, your network is everything. Your network is everything, more than a CRM, more than whatever else. Network. They really harp on that.
Yeah. So we're going to put that in place coming up. So just stand by on that. And again,
we're just working out the bugs. I know Audrey wants me to just go. And I'm like, I had a big bug today where I had 2 different Zoom meetings and everyone was on different ones. So that was a challenge.
That's not a bug because something we need to work out. That's because Kevin schedules himself like someone in 1932. And he's got his calendar and his pencil ready. Maybe you'll get it on his schedule. Otherwise, forget about it. So anyway, I think it's as easy as, giving you guys a link to set this up. So anyway, we're going to get it done and we're looking forward to it. And in 2025, you're not going to just sit there and wait for the phone to ring or an email to come through. That is not how we get business. That is never how we've gotten business, except for this very short period of time during a pandemic. And who the hell wants to go back to that? So with that being said, Robbie, anything else you want to share with anyone as we sign off for the day?
ChrismanCommentary.com. Check it out. Sponsor this show. This is an amazing show. Come on, I see a lot of attendees here. Someone's company's got to be interested. What's the matter?
Yeah.
Make it a good deal for all of us.
And also remember that we have a YouTube channel that you can go back and watch our previous shows on. You can put it on 1.5 speed and it's fun to watch.
You at half speed, that's the last thing I need.
1.5 speed. It's
okay, that's better. That's better.
Are you kidding me? I'm not suggesting you slow me down. I picked it up. It's very entertaining. All right, kids, have a wonderful thing.
He does slow down Megan though, Robbie, just so you know.
Oh yeah, we always
But,
tell her to slow down Megan because she's always coming on here to give some AI presentation that walks us through a process, and then we're like, okay, slow her down, speed the rest of us up. It's all
slow her down in my DMs, Audrey. I will see you guys all soon.
happy Thanksgiving, everyone. Have a wonderful week, and we will see you next Tuesday. Bye, kids.